Hello, and welcome back to Explain the Charts, your go-to channel for no-nonsense technical analysis. Today, on October 9th, 2025, we are taking a deep dive into Litecoin, or LTCUSD, which is currently at one of its most pivotal moments in recent history. The entire market is watching Litecoin, and the main reason is the imminent approval of a spot Litecoin ETF. Multiple firms, including Canary Capital and Grayscale, have filed applications, and Bloomberg analysts are giving the approval a staggering 90 to 98% probability. This has led to a surge in institutional interest, with reports of firms like MEI Pharma allocating over $100 million to a Litecoin treasury. We're also seeing data that large whale wallets have been quietly accumulating LTC, signaling strong hands are betting on a positive outcome. However, there's a major roadblock. The ongoing U.S. government shutdown has brought SEC operations to a crawl, delaying the final launch. This creates a fascinating dynamic of extreme bullish sentiment being held back by short-term political gridlock. The regulatory environment has also improved, with the SEC clarifying that proof-of-work mining, which Litecoin uses, doesn't constitute a securities dealing. So, the fundamental picture is overwhelmingly bullish, but the timing remains the big question mark. Now, let's turn to the charts to see how this narrative is playing out in the price action. Looking at the daily chart, we can see the story of the past year has been defined by reactions to this ETF news. Notice the explosive rally in late 2024, where LTC surged from the $60s to a peak near $147. We saw another massive spike in mid-January 2025, which news reports directly correlated with amended ETF filings and growing speculation. These two powerful rallies established a formidable resistance zone between $132 and $145. This is the most important area on the chart right now. It's the wall that bulls need to break. After hitting this resistance, the price saw significant corrections, finding strong support around the $98 to $104 level on multiple occasions. This zone has proven to be a key demand area where buyers have consistently stepped in. Below that, we have another historical support level in the $85 to $90 range, which has also served as a major floor for the price. Let's zoom in on the price action since July of this year. After a period of consolidation, we can clearly see the recent breakout that began in late September. The price pushed decisively from around $105 to our current level near $118. This move aligns perfectly with the latest news about the final ETF filings and the weakening dollar due to the government shutdown. Currently, the price is consolidating just below the $120 mark, seemingly gathering strength for its next move. The critical question for every trader now is whether this momentum is enough to finally challenge that major resistance zone at $132. Switching over to the 1-hour chart, we get a clearer picture of this recent uptrend. The move up from the $105 level has been very structured, forming a pattern of higher highs and higher lows. We can identify several key short-term support levels that were established during this ascent. The area around $115 has acted as a recent floor, and below that, the $112 level was a previous point of consolidation. As long as the price remains above these levels on the hourly time frame, the short-term bullish momentum remains intact. However, you can see that the upward angle has started to flatten out over the last couple of days. This indicates some indecision or profit-taking as we approach higher price levels and the memory of that strong overhead resistance. For our short-term traders, let's drill down to the 15-minute chart for the most recent action. In the past few days, we saw a push towards the $125 level, which was met with selling pressure. Since then, the price has pulled back and is now trading in a relatively tight range, mostly between $115 and $119. This consolidation is typical before a major news catalyst. The immediate short-term support to watch is the recent low around $115.38. A break below this could signal a deeper short-term pullback. To the upside, Bulls need to reclaim the $119.60 area to show renewed strength for another attempt at breaking $120 and beyond. So, let's pull back to the daily chart and summarize what we're looking at. The market is in a state of high anticipation, and the chart reflects this tension. Let's recap the critical price levels you need to have on your radar. The most significant hurdle is the resistance zone between $132 and $135. A decisive breakout above this area, especially on high volume, would be an extremely bullish signal. The next level of resistance to watch after that would be the prior peak around $145. On the downside, our first key support area is the recent consolidation zone of $112 to $115. A more significant support level lies at $104, which has held multiple times this year. If that were to fail, we would look towards the major support floor in the $85 to $90 range. Now for some unbiased predictions. The primary bullish scenario is straightforward. The government shutdown ends, and the SEC officially approves the ETF launch. Given the huge institutional interest, this could easily fuel a rally through the $135 resistance. Under these conditions, a move towards $160 and even $200 by early 2026 is highly probable. I would place the likelihood of this scenario happening eventually at over 80%, but the timing is the key unknown. The bearish scenario would involve a prolonged shutdown that kills market enthusiasm, or a sell the news event where the price pumps into the approval and then dumps. If we see a strong rejection from the $135 resistance zone, with price falling back below $115, a retest of the $104 support becomes likely. A failure to hold $100 would be a major warning sign for bulls. The likelihood of a deep correction to $85 is low right now, but increases significantly if the ETF narrative somehow completely falls apart. Key things to watch for in the coming days are any news regarding the U.S. government shutdown and SEC announcements. Also, keep a close eye on Bitcoin's price action, as Litecoin will likely follow its lead. Finally, pay attention to trading volume. Any breakout attempt will need strong volume to be considered legitimate. That's our analysis for Litecoin today. We have a powerful fundamental catalyst colliding with key technical levels, making this a very exciting chart to watch. Thank you for joining us on Explain the Charts. Please remember, this content is for informational purposes only and does not constitute financial advice. Trading cryptocurrencies involves significant risk, and you should always do your own research before making any investment decisions. Be sure to like and subscribe for more in-depth chart analysis.